there's a way to finance your business using your personal credit? Actually, Alex Hormozi covered that in great length because he used that same exact technique to finance his business. Spoiler alert, he did not only use that for one of his businesses, he used it for 6 of his business locations.
This is how I grew. I went from 0 to 6 locations at my brick and mortar chain in 3 years. I used the exact same model that I'm about to show you to go from 0 to $2.5 million a month within, I think it was like 12 or 14 months. The amount of time that you can get interest-free financing. You can pretty much take unlimited money, all right, for the most part. Now you pay your stuff off, you get bigger limits, whatever. But the point is, and this is literally how I started my second business, is that I would use my cards, I'd put the money on the card to acquire the customer. And so right now, if you don't have money or you don't have capital and you think it takes money to make money, you just keep believing that beautiful lie and let everyone else go win while you keep complaining. We can beat all those people who have those limited beliefs. But I had 1,000. Now the portfolio we do does $85 million a year. I took no outside money to do that, which means if you can learn how to play and multiply and multiply and multiply and not use your own money.
And that is funding that you can get in as soon as 3 days. Again, 1, 2, 3 days. It's actually 3 to 10 days. That's the maximum length it can go, but it's super fast. You know, Alex has used this technique superbly well. But, I do this every day, each day. I help entrepreneurs fund their business in this exact same manner. So what I'm saying is that there is a more efficient and more long-term way of using this technique under a professional island. This hack works super well for startups, for existing businesses, and very importantly, for real estate. Like for real estate investors who are looking for down payment and closing costs. So this works perfectly well, and this is our biggest market for that. Imagine if by the end of this week, you could have money deposited directly to your account, and then you can even go to the ATM and withdraw it. What would that do for your business? So let's dive in. If you'd like to get money by the end of this week, I put a link for you down below. It's literally a 2-minute application, and then you can get funded by the end of this week. This funding has 2 steps, step number 1 and step number 2. What Alex Hormozi covered is step number 2. But step number 1 here is the most important. If you miss out on that, you miss out on everything. That step number 2 by Hormozi is called credit cards stacking, meaning it is the ability to use different credit cards at 0% interest rate before the interest kicks in. Let's take a real example. We have this client, she got approved for $140,000 because she needed money for a down payment and closing costs on a real estate investment. So she got approved, you see, her credit was 734. She uses 32% of her credit. She has 4 credit lines. And note this. So step 1, she got approved for up to $125,000. And for credit card stacking step 2, she got approved for up to $25K. But note, she got funded $140,000, and see how much she got approved for credit cards. Only $25,000. This is why I'm stressing a lot on why step number 1 is super important. Because if she didn't get that $140,000 and she got it in 3 days, she would have lost that property and everything she put in it already. You see, credit card stacking is on average 25% of your credit mix, meaning that 25% of the total funding. This is why step 1 is that important. Now, some people only choose credit card stacking and we can stretch it a bit more. But however, there's nothing compared to step one. This is why it's so important to stay until the end. First, let's rewind a bit. Who is this funding for? Well, it's for entrepreneurs who are looking for a maximum of $500,000. But our average funding is around $125,000. Why 125? It's because it's for people who have stellar credit. Actually, our minimum credit requirement is 680. And the better the credit, the more you can get. Meaning, a 680 guy will never get $500,000. Oh, no. But an 800 credit guy might possibly get that. Second, you must be using less than 40% of your total credit. Meaning that if you have a $100 credit card, you need to be using less than $40 on that. If you're maxed out, no. This is not for you. Third, you need to have some trade lines, meaning like credit card or, I don't know, a loan or mortgage, something. Having just like one student loan reporting on your credit, no, that will not work. But, if you think those requirements are too high for you, there's a way around it. As an example, I have this client in Margate, Florida. He's a mechanic. He needed to buy a new tow truck for something. He needed $60,000, but he had credit problems. So what he did, he used his wife's credit and he got it. That other client used his mom's credit and he got it. An important example, I have those three entrepreneurs, right? They had a startup. They needed $300,000. So they each got approved for around $100,000. So combined, they got the $300,000. So those are ways to get around that. Just make your mind think. What do you get out of credit card stacking, right? Or what are the advantages of credit card stacking? First, you get 0% interest for 6 to 24 months. Again, let me repeat that. 0% interest for 6 to 24 months. Imagine that. Like free money almost. Second, those are business credit cards. Even if you did not have a business before, we'll show you how you register a business. Anyways, those are business credit cards that report on your business credit, not on your credit. Therefore, what that does is that it doesn't show on your personal credit. It's like you have an invisible debt so that when you go to the bank and apply for something, they don't even see it because it's on your business credit. Third, there are no financials needed. You know, when you apply for a business loan, they ask you for all financials like P&L, a balance sheet, income statement, etc. Not here. This is strictly on your credit. And guess what? It's a computer that does the underwriting that approves you. There is no human interaction in that. For those business credit cards, you can use them like a line of credit. You see, we pair you with third parties like Meilo. So let's say sometimes you can use contractors who do not accept credit cards. No problem. You can just withdraw the cash. And on top of that, those third parties give you extra time to pay off anything, like 30 days extra, etc. It works. Chef's kiss. And I did a video about that previously. Just check it out and it will explain more. Fifth, your available credit increases over time. You know, when you use those credit cards and you pay them off and you use them again, you pay them off, then every 6 to 12 months, you can ask for a credit limit increase. As an example, I know this guy, he has $700,000 of credit available on his business credit card using that exact technique. 6, the icing on the cake is that a lot of these cards, they come with like points, rewards, and you know those private airport lounges? Yes, some of them will come with access to that. So imagine asking for a business loan.
I want a business loan that comes with miles, rewards, and private lounges at the airport.
Imagine that. There are no loans, no business loans come with that. This gives you that. So FYI. How does credit card stacking work? Well, we apply for you strategically all at once to different banks. So as an example, you see, you'll have credit card A, credit card B, credit card C, credit card D. Now, each one of those banks, they pull from a different credit bureau. So credit card A will pull from, let's say, TransUnion, and then bank B will pull from Equifax, and then bank C will pull from Experian, as an example. So you see, the good thing is that banks communicate with one another. That protects us. At the same time, it takes 2 weeks for this communication to go through. So let's say if you apply at bank A, bank B will see that, but in around 2 weeks. So the goal is to apply within that window of time, that 2 weeks window of time, because once bank A sees that you apply to bank B, they will no longer want to give you the funding. So it's important to have all the banks funding you all at once. This is when you get all your funding. It's like a way to outsmart the banking system within that 2 weeks. It's like a hide and seek game within that 2 weeks. So it's very important to do all your applications and to get the funding within that 2 weeks period. Now, what is step number one? The most important step number one is about personal installment loan. It's called installment loan stacking. Installment loan stacking is about applying to different lenders at the same time. So we will apply for you for an installment loan at bank A, and then at lender B, and then lender C, and lender D. Now, what's important is to understand is that each of those lenders pull your credit from a different credit bureau. This is the strategic part. So bank A would pull from, let's say, TransUnion. Bank B would pull, let's say, from Equifax. And bank C would pull, let's say, from Experian. And bank D, and goes on. You understand the logic. Now, this is important because the banks, remember, they communicate with one another, which is a great thing to protect us. At the same time, the minute that bank A realized that you also wanted a loan from bank B, they will deny you. So it's very important to apply at once to all those banks within that window of time that each bank realized that you applied elsewhere as well. So that's very important for you to net the most loan as possible. So it's like a hide and seek game to outsmart the banking system while staying within all the guidelines possible. Those are the cheapest possible installment loans, and you have 3, 5, and 7 years to pay them. They're like cheaper than SBA loans, so you have a very long time to pay them, and they're very cheap. We'll cover that shortly. What do you get out of installment loan stacking or personal loan stacking? Or what are the advantages of installment loan stacking? First, you get the most funding and the fastest within 3 to 5 business days. Second, with installment loans, you get the money deposited directly to your account. Whereas with credit cards, they take 5 to 10 days. And then you need to wait for the card to arrive via mail. Then you need to activate the card, blah, blah, blah. This is really straightforward. 3 to 5 days, money deposited in your bank account, period. Third, you have a long period of time to pay it off, like up to 7 years. Usually it's 3, 5, and 7 years. Those are the choices. Imagine if you have $100 to pay in 2 days, 2 payments. That's $50 every day, right? But if you had 10 days to pay it, that would be only $10 per day that you'd have to pay. Imagine the difference on your cash flow. So it's very important, up to 7 years to pay it off. It's like an SBA loan almost. Fourth, those are the cheapest bank loans that you can get on the market because we use a lot of like credit unions, etc. Plus, those are personal loans, not business loans. As an example, if you want to buy a home, you can buy it under your personal name or under your business name. However, A mortgage under your personal name will be cheaper than a business mortgage. Fifth, it's minimal paperwork. It's not like a business loan where you need to give all financials, P&L, etc. This is literally, you'd ask you for W-2 pay stubs, utility bill, and I think tax return. That's it. Have you ever applied for an SBA loan? Like, oh my God, they ask you for everything under the sun. Like, they want to know the color of your underwear. And listen, I do not want to tell them that I wear a string underwear, okay? But you know what? No, I do not wear a string underwear, okay? Note. And then, when you apply for an SBA loan, as an example, it can take up to 3 months. You need to give everything under the sun 3 months. This is 3 days. 6, very important, there's no collateral needed. When you get a business loan, they'll put lien on your businesses, like on your account payable, on your sales, etc., etc. This one, no collateral. So if there's one lesson that you should remember in about installment loan stacking, is that it's like hacking an SBA loan in 3 days instead of 90 days with minimal paperwork, no collateral needed, directly on your account in 3 days. You cannot do better than that. I'm sorry. You cannot do better than that. What is the process for installment loan stacking? Like, how does it work? Well, first, we assess your file, right? Let's say this client has a TransUnion score of 764, some revolving loans there, like an American Express credit card, and let's say a car loan here and some student loans, etc. So their monthly expenses is around $13,000. So from this, based on your DTI, the debt to income ratio, we will give you an offer and prescribing how much you would need to show in income in order to be approved for funding, right? And if you like the offer, we would send you an agreement and you sign it back and we start working for you. Those are the options that you get to choose from. So you see, you have loan A, loan B, loan C, loan D, loan E. Those installment loans for 90,000, 13.5, 32,000, 50,000, etc. Now, you can choose all of them at once, or you can only choose one of them if you prefer, whichever. And you see, this one is 5 years. Those were your payment terms. The rate is 14.8. I see the cheapest rate here at 11.7. And then once you do your select, and then as well, the documents that are required, your W-2, in this case, right? Sometimes it will be a 1099 or a tax return, but it's in this case, it's a W-2, a photo ID, voided personal check, last 3 weeks bank statements, and current utility bills. In that specific case, again, it all depends on your case. On, will we need to ask you for the last 2 tax returns? Yes, this happened as well. And after that, once you send everything, you get funded within 3 to 5 days. That's the next step. We get funded within 3 to 5 business days. That's it. Now a question. What about all those credit inquiries on your credit? Because you're getting loans from a lot of different banks, right? Remember back in the days when you went to buy a car and then you go to the dealership, you find a car that you like, and then the car dealer tell you,
we're going to give you all the financing options that you qualify for.
And you go,
Great! I want to see all my financing options to finance this car.
and then suddenly you have like 20 credit inquiries on your report, and then your credit goes to the shitters, right? That used to be a real scenario. Fortunately, there was a law that passed to protect you. So that within 15 days, all the inquiries that come within 15 days, they will count as one inquiry, and that will not affect your credit as if you had 20 inquiries, right? And do not take my word for it. Let's go directly to the Experian webpage. For those who do not know, Experian is one of the biggest credit bureaus in the USA. So if you go to Experian.com and you go in their frequently asked questions, FAQ, you'll find this. Do multiple inquiries count as one? And if you scroll down, you'll see Vintage Score counts multiple hard inquiries from a 14-day period as one inquiry. Again, as one over a 14-day period. This is why 2 weeks you need to apply for all your loans and get funded. Why you should not try this at home. First, remember that we apply to different lenders, right? Let's say to bank A, to lender B, to lender C, and to lender D. The most important things is that you need to understand where each lender apply, meaning that to which credit bureau that lender A apply to, or lender B applies to, or C, and going forward. So, looking on your own for, let's say, 10 different banks and where each bank apply at, that's a big job, and there's no need for that. Second, once you get a new loan and it goes on your credit, right? No lender will want to give you a new loan again right away. You have to wait 6 to 12 months before getting another loan. The one thing you should remember is that you should apply for all your loans all at once within a 2-week period. Third, study shows that with stacking, you'll get around 5 to 8 times more funding. The problem with entrepreneurs is that they try to get all their money from one source who will never give them all the money. What is the cost for that funding? Because after all, you're hiring a team of professionals to get your business funded, right? Think about hiring a good lawyer, right? Let's go back to a famous example. O.J. Simpson. If O.J. did not hire that team of amazing lawyers, what would have happened to O.J.? Meaning that it is the same thing for funding. Meaning that you want to hire the best in order to fund you or your business. It is not the right move to go cheap on that. So the market rate for stacking is around 10 to 20% origination fee. That means that you will be billed that amount once you get funded. Smack in the middle, we're at 15%. But, even with a 10 to 20% origination fee, guess what? Yes, you've guessed it. This funding is still one of the cheapest money that you can find in the market. Let's compare and let's do the math with other type of funding. Let's compare the cost of the funding compared to other type of loans on the market, right? Remember, our funding has two parts. First of them is the credit card stacking. Now, the credit card stacking, so what we're going to do here, we're going to do a yearly cost over 2 years, right? And the credit cards loan on our part is 0% up to 24 months. Therefore, over 2 years, because of the origination fee of 15%, it will cost you 7.5% each year spread over 2 years, right? Now, an SBA loan for business funding is around between 10.5 to 14.5, and then there's an origination fee anywhere around 2 to 5%. So if we spread it out over the first 2 years, it will cost you around 13% each year over the first 2 years, right? Plus, the most important part, an SBA loan takes up to 3 months to get funded. Again, 3 months. Whereas with our loan, it takes you 3 days. it's 3 to 10 days, but imagine that 3 days versus 3 months. Plus, the SBA loan underwriting process is superbly tough. Whereas this is only 3 days again versus 3 days versus 30 days, right? Now, if you compare it now to the people for real estate, let's say people are looking for gap funding or real estate mortgages. Now, a bridge loan, which is a short-term loan, let's say for a person looking for fix and flip. So the average rate, the mortgage would be around 12% over a 12-month or 24-month. Plus, there is around 4% origination fee. Plus, there are closing fees, right? Closing costs, which are around 2%. And then origination fees are around 4%. Plus, the mortgage is around 12%. So it will cost you around 18% per year. Now, if you go to business loan, when I'm in business loan, I'm talking about revenue-based loan or what they call MCAs, merchant cash advance. It will cost you around 35%. You could go cheaper and it can go a lot higher as well. So in regards to comparing all those loans, yes, this is a lot cheaper for that part of our loan. Second part, which is the installment loan stacking, right? Because we have that part too. We need to compare it over a longer time. So we will do the same, a yearly cost over 5 years, what it will cost you per year. So the installment loans, on average, we are at around 12%, plus there's a 15% origination fee. So the way to put it is to spread 15% origination fee over 5 years. So that is around 3% per year. So it will cost you around 15% per year with our stacking solution. Now in SBA loan, since it's around 10.5 to 14.5 per year plus an origination fee, let's say it will cost you around 11% per year. So yes, an SBA loan for your business will cost you cheaper on the long run. Again, however, it takes you up to 3 months to get funded with a really grueling underwriting, and they own your business. Whereas with our solution, with the stacking solution, you basically own your own business. You have nobody to respond to, no lien whatsoever on your business, and it takes 3 days. Again, 3 days versus 3 months. Now, the real estate bridge loan, yes, that stays the same. The short-term real estate loan, always around 18% per year. So, but we need to compare it now to the longer-term real estate loan, like the 30-year loan for rentals called DSCR. So right now in 2025, the average rate is around 7.5% per year. Plus there are origination fees from 2 to 4%. So over the long run, in the first 5 years, yes, that will cost you way less than our loan, around 8.5%. This is one of the examples that, you know what, you should go with a long-term DSCR loan over our loan. However, here's the difference. That takes you 1 month to get funded and a grueling underwriting as well, plus an appraisal and everything. And the bank owns your real estate. Whereas here, you're literally a cash buyer. Yes, it costs you more, but this is like 3 days. 3 days versus 1 month. Again, this is cheaper. I would recommend this if you can withstand the grueling underwriting and the time length, right? And yes, the business loan working capital is always a lot more expensive. So you go with the SBA loan, which is 3 months. You also have the business term loan, I forgot to mention, which will be around the same cost and will take around 1 month to fund, but with a very grueling underwriting. And that's it. So you can compare. And now, very important, the most important is that our stacking loan has two parts. The installment loan, but credit card loan part as well, which is 0% up to 24 months. So when you combine both the credit cards and the installment loans, well, the total cost decreases a lot. So at the end of the day, you still end up beating most of these other options. And then you do it in 3 days. Finally, the most important and the most beautiful thing for you is that we only get paid after you get paid. You get paid from the money that we give you. So you get paid first, we get paid last. So we are so confident in ourselves that we don't need to get paid in advance, okay? And let me share something with you. I have those clients, they tell me, oh, 15%, it's too much, and they go and get an MCA loan, which charge them like 40% a year. It blows my mind. And those are more intelligent people than I am, but they do not do the math, my God. And this is so cost efficient that I could actually raise my rate. What do you think? Huh? Instead of 15, I charge 20. I'll charge you 20, just as a favor. I'm just messing with you, okay? If there's one lesson out of all that you should remember is that, if you have a 680 plus credit and you need up to $500,000, this is a good fit for you. Stacking is money that you literally can get by the end of this week. In 3 days, you can go to the ATM to withdraw it, and heck, you can go to Vegas and gamble the money if you want. I do not recommend that. FYI. Third, no financials needed. Fourth, no collateral needed. Fifth, it takes 2 minutes to apply. Sixth, you have up to 7 years to pay it. And finally, it costs you less than other type of loan. Again, imagine if by the end of this week, you can have that money in your bank account. I put a link for you below for that 2-minute application. And if you like that knowledge, and if you think that it helps you, please subscribe and like and share it with other people. One last note. Alex wrote 2 great books, $100 million offers and $100 million leads. I highly suggest that you read them. And also, I watch a lot of his wife on YouTube, actually. So check it out. If you like this video, you'll love this one.